Good day, YouTube. This is Jay Money with Falling Forward Financial. Just an article here on dividends. As you follow my channel, I have quite a few dividend stocks. Might be working on some more dividend videos here this evening. But I come across this and got some interesting ones in here. This is 4 top dividend payers of the S&P 500, so a little bit different dividend stocks than what I usually talk about, but there are hundreds of dividend-paying stocks in the S&P 500. They come in all shapes and sizes. Some pay out high dividend yields, and that's what some people are after, some retirees and so on. I have growth stocks as well as some dividends. I kind of like a mixture of both, and so it's just kind of my preference. But 4 dividend stocks that stand out for their competition of yield, dividend growth, and record are Chevron, Consolidated Edison, Federal Reserve Investment, and Realty Income. And I'm sure if you're watching this, you've probably heard of all these, especially Realty Income and Chevron. Consolidated Edison, I've heard of a couple times. Federal Reserve Investment Trust, once or twice. Not too many people talk about that one. So the only one of these that I have is a little bit of Chevron and a little bit of Realty Income. Ticker is O. But a big oil dividend. Chevron has increased its dividend for a remarkable 34 straight years, qualifying for its dividend aristocrat. The oil company has been able to weather the sector's volatility to deliver consistent dividend growth. Among the keys to the success are the integrated operations and strong balance sheet. Chevron produces oil and natural gas, manufactures transportation fuels, lubricants, and petrochemicals, and operates other energy assets. The diversified help to generate a steadier cash flow to support its dividend, which currently yields 4.6%. That's well above the S&P 500's roughly 1.3% average. Chevron's oil business faces uncertainty as the global economy sets its sights on reducing carbon emissions. That's leading Chevron is to accelerate investment in low-carbon opportunities by tripling its spending plan to $10 billion through 2028. So if you're looking to get into this one, it looks like it should be safe for a oil and gas stock. As you know, I follow a bunch of EVs, so you're probably thinking, why is he talking about an oil and gas stock when he talks about EVs? But I kind of talk about it all. So there's still a lot of gas-powered cars out there. I think another term for them in the EV world is ICE, internal combustion engine, but this is a dividend player, so and then I have it pulled up here on Robinhood. So this is kind of a 1-year look at Chevron. So it hasn't gained a whole lot. I mean, it has, but it's went from the $85 range on up to $111, $117 here, and just in the past couple days. Here's a look at the 3-month. So it's about 20% in the last 3 months, down a little bit in the last month, down in the last week, and here's what it looked like on Friday. But if you don't know what this one is, you can pause and go over this. I kind of went over some of it, but this has been around for quite a while. 1906, volume of 13.5 million, average is almost 10 million, $215 billion market cap, and there's your dividend yield. So that's why we're making the video at 4.7. So not too bad. Our ratings on this one at 59%, so not too bad. If we go over here to Reddit, not a whole lot of information there. We'll check out StockTwits. Currently at 111.91, the 52-week low of 83.53, high of 118. So you're getting a little bit of appreciation, but people buy these, I suppose, a little bit for the appreciation as well as the dividend. Here's some more information. Let's see if there's any other juicy details for us. Big oil. So big oil used to be the thing, but a lot of people are getting out of them, getting into other things. I suppose there's still a lot of people that still have some big oil, but the next on the list, powerful dividend, Consolidated Edison has been exceptional dividend stock over the years. The New York City focused utility has increased its payout for 47 straight years, so can't beat that. It currently yields a 4% an attractive level in today's low rate environment, still much better than a bank. Company is a leader in the clean energy. It's the second largest solar energy, which follow me, I talk a lot about solar, producer in the North America and large scale wind business. Meanwhile, investing heavily into improve long-term sustainability of its operation. Expects to invest $12.7 billion through 2023, with a third of that money going toward green projects and the rest to improve the safety and reliability of the assets. And so if we take a look at Consolidated Edison, or ED, over the last year, not a whole lot of growth. I mean, this one's been up and down all over the place, $78 range to $67, back up. Just doesn't seem like it can break that 80 mark. Here's a look at the last 3 months. So it's up a little bit in the last month, not too bad, at 4.64%, and up a little bit in the last week. And here's a look at Friday. So if you don't know what this one is, feel free to pause and go over this information. Just to keep the video short, this one's been around a long time, founded in 1823. 2 million average shares, 3.96 dividend, and a $27.60 billion market cap. Not too great of ratings on this one, showing to sell this one, so this one's been up and down all over the place. So, but again, I'd say a dividend play. So, let's see here. If we look on Reddit, and nothing there for us. We'll look at StockTwits. See if there's any details here for us. The recent reporting quarter, 304 institutions increased their position while 200 decreased. It's kind of interesting. But they're currently at 78.03, 52-week low of 65.56, high of $80.43. So about a $15 swing in there, $15 appreciation. So still not the greatest, but again, these are dividend stocks, so that's the reason people hold these. So currently at 78.03, and this is actually showing a moderate sell with a downside. So if you don't want a stock that's going to depreciate, you might want to look at some other ones. But the king of the hill, so the Federal Realty has treated its investors like royalty over the years. Real estate investment trust, which I have talked about a lot of REITs on the channel here. I have quite a few of them myself, has increased its payout for 53 consecutive years. That's the longest streak in the REIT sector and qualifies as a dividend king. Federal Realty payout currently yields 3.4%. The retail REIT has steadily grown its dividend over the years by focusing on increasing the cash flow per share. One way it's done this is by concentrating on owning high-quality retail-based properties in major coastal markets. And so if we take a look at this one, and again, if you missed the ticker on this one is FRT. So Federal Realty Investment Trust, if we look at this one over the year, this has probably been the biggest gainer. So $82 range on up to $132. Ticker is FRT. There's a snapshot of what this one is all about. Been around since 1962 with a 3.3 dividend. And not a whole lot of volume on this one, 362,000 with a $10.12 billion market cap. And this one's at a 75% hold. And so if we take a look here on Reddit, nothing really in there for us to find any good details on. So we'll take a look here at StockTwits. Currently at $128.94. So if you have any of these, go ahead and list it in the comments. I would assume the most of you have Chevron or Realty Income, ticker O. But this one has a 52-week low of 81.85, a 52-week high of 135.56. Recent reporting quarter, 19.03% of the institutions made no changes in their position. In the recent reporting quarter, 127 institutions increased their position while 90 decreased. And see what TipRanks has here. So currently this one's showing a moderate buy, so probably the best rating so far with a 3.15% upside to 133, high of 140, low of 125. And last we will look at Realty Income. Lives up to its name. The REIT, which pays a monthly dividend, which I always like, has increased its payout 113 times since listing on the New York Stock Exchange since 1994. That seems like a lot, so including in each of the last 96 consecutive quarters. Overall, it's given investors a raise for 26 straight years, qualifying it as a dividend aristocrat. The retail REIT currently yields 4%. So, again, not too bad. And we will take a look here on Robinhood about Realty Income. Over the last year, this one's up a little bit over 19%, going to almost 20%. Looks like it hit a low there, and this one's been kind of up and down as well. And on up to 71.95. Almost 2% in the last 3 months. In the last month, 0.57%. Down a little bit in the last week, and down on Friday. Again, this one is a REIT, been around since 1969. Probably the most volume on this one, with almost a 4% dividend yield and a $40.12 billion market cap. And this one has pretty decent ratings. 60% buy shown on this one. Over here to Reddit. Whoops. Like I said, if you have any of these, go ahead and list it in the comments along with your cost basis and any other information you want to share on these, or if you have any other favorite dividend stocks or any other REITs you would like to share that we could all share and make some money on, that would be helpful as well. So back to ticker O here on StockTwits, currently at $70.91. And 52-week low of 57 and 52-week high of $74.60. Ditch your old bank. SoFi, I've talked about SoFi here on the channel before. The revenue growth is accelerating. In the next 5 years, the growth will be better than the last 5 years. That's interesting. Twit stats, today's change 1%. Revenue growth is accelerating in the next 5 years. The growth, about the same. Hate these spinoffs, always get screwed on covered calls. My 7250 November 19 was assigned somehow. So this one, I don't do a whole lot of options. I just did an option Friday on AT&T. I might make a video about that. But this one, if you don't like a whole lot of movement in the stock, and you could do a option on this one as well. But again, I don't give tax, legal, or trading advice, so that's all up to you. But I just did one on Friday with AT&T. It was down and bought some more AT&T, so that's been one of my favorite dividend plays here lately. So, but back to tip rings, currently at $70.91 with a moderate buy, 9.65% upside to $77.75, high of 81 and low of 70. But if you have any of these, go ahead and list it in the comments, along with your cost basis, any other information that you want to share, and that way we can all compare notes and make money together. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.